of petroleum exporting countries, popularly also known as OPEC, has downgraded its forecast of global economic growth in 2017 from 3% to 3.1%. Now, the cartel adds that growth in the Eurozone is also expected to slow to 1.2% instead of the 1.5% clocked in 2016 so far. Now, it hasn't changed its overall assessment of oil demand growth in 2017, but it has forecast a new demand of 1.2 million barrels a day. That is the same as 2016 and around 300,000 barrels a day above the last 10 years average. So even despite that status quo, the average consumption over the past decade has been increasing. According to OPEC, production from countries outside the cartel, that will fall by 800,000 barrels this year from 2015 to $6.03 million barrels per day, this year. Now, the downward revision of 140,000 barrels a day, that's mainly because of lower output in Canada and US, so expect some kind of slowdown in shale production there. For more on that, now I'm joined by Dr. Abhishek Deshpande. He's oil market analyst at Energy Aspects, pardon for that. Hello, Dr. Deshpande. Thank you so much for joining us on the show. So what are you making of these numbers? OPEC says that the demand forecast remains stable as of now. What's your take on this?
Just wanted to clarify. I work for Natixis, the French investment bank. My outlook for demand, particularly from the OPEC's report here, is clearly for the first time they've given the 2017 numbers, and they are maintaining their demand forecast for 2017 as close to 1.15 million barrels per day, which seems to be a little bit, I would say, bullish for the time being, given the fact that post-Brexit we have not even seen, we don't even know and remain uncertain in terms of what that impact would be on the demand in the near term, and which we would expect to have some impact not just on UK but European demand, where they seem to be, by the way, showing some negative impact of the Brexit on the European demand. But we believe that it probably will be slightly more than what OPEC is currently trying to show in its current report for 2017 numbers.
Also, when they say a decline from the non-OPEC side of the supply chain, is this demand limited to the Canada and the US? Is the impact mostly from the shale side, or are there other countries as well where supply is expected to be lesser?
Well, to be honest, according to OPEC's recent report, it's predominantly going to come from North America, of which United States will continue to contribute to the decline in 2017, as per their report, which is around 140,000 barrels per day decline next year. And the other single most decline would come from former Soviet Union, according to this report. I think in 2017, we do believe that non-OPEC production will continue to decline, especially if the oil prices were to remain under pressure and not rally. Then in that case, we do still continue to see a large part of the balancing effect to come from United States or North America in particular. However, if the oil prices were to rally in 2017, then we could see some offsetting effect of the oil price rally in the cyclical production returning, particularly from United States, and also, for that matter, even some of the other key producers such as China, which has shown a significant decline this year, to also be offset by the increase in oil prices.
Right, Abhishek, let me also slip in one quick question, last one. Now, we've seen Saudi Arabia raise output to 10.55 barrels per day. Now, despite all the talk of putting a cap on the ceiling and being in this tussle with Iran about it, what do you think is playing out in terms of dynamics in the market right now?
I think given the fact that we were initially expecting the third quarter to be quite tight, especially after what we've seen in the first 6 months, despite weaker theoretical balances, we have seen seriously unprecedented levels of outages in the market, emanating from Nigeria to Libya to Canada, for that matter. And at that point, markets, and especially Saudi Arabia, was convinced that the markets were getting balanced, and they did not have to do much in order to gain any further market share, for that matter. And they were of the view that they don't want to provide any further shocks to the market. Having said that, as we are now in the third quarter, we are still seeing pressure on prices, which according to us is not fundamentally driven. It is a far more dollar-led move that we have seen in oil prices lately post-Brexit. But it clearly also goes to show that Saudi Arabia, which you are quoting in the month of June, has been producing, according to secondary sources, in my view, around 10.3 million barrels per day. Slight increase from May numbers was more to do with the domestic demand usually rising in summer months. But we don't see Saudi Arabia trying to increase their production any further, as they do not want to provide any further shocks to the market, as we see. And any current shocks to the market, we still believe, are not fundamental, but they are more dollar-led.
Right, Abhishek.